Jesse, is that the gold and silver bull market is far from being over, um, based upon where we are in the game. But at least we have someone that can get us to the other side in not such a dirty manner. Maybe he can unite the country at the same time. Maybe his cabinet can help unite the country and make us realize that we need to go through a kind of like the Shawshank Redemption. You know, we had to crawl through that tunnel crap to get to the other side. Well, we have to do that to some degree. Whether it means a depression or some form, something worse, but to get to the other side, to take back our manufacturing capacity, to become an engine of growth, instead of really, exporting nothing but inflation. So reasons to be defensive are still here, but it is a risk-on environment right now, and that could certainly provide opportunities in other asset classes too. So I'm not saying gold and silver are the only place to be, but I am saying that the reason to be in gold and silver are far from over.
In today's episode, Andy Schectman dives into the art of stacking gold and silver the right way. He emphasizes that successful stacking isn't just about accumulating metals, it's about a strategic approach that ensures long-term security and financial resilience. Schectman stresses the importance of prioritizing physical metals over paper-based assets, noting that true wealth lies in tangible ownership. He also highlights the value of balancing gold for stability and silver for its growth potential, helping stackers build a well-rounded portfolio to withstand economic challenges. Schectman shares his bullish outlook on precious metals, citing critical macroeconomic factors like rising inflation, unsustainable government debt, and the global trend of de-dollarization. These, he explains, are driving demand for gold and silver as essential hedges against economic uncertainty. He is particularly optimistic about silver, praising its unique dual role as a monetary asset and a key component in green technologies like solar panels and electric vehicles. With industrial demand poised to surge, Schectman believes silver's potential is unmatched. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment. We're offering a big discount in NordVPN, which is an essential tool if you want to browse the internet in a secure and private way. For just a few dollars a month, make sure your privacy is never compromised.
Only 25 to 30% of all the silver coming to market comes from guys like Sean and Keith. And Keith has withheld production before. And Dolly Varden is not in production. And so, they're in a more exploratory type of deal. And so when you talk about why don't more companies do this? Well, first and foremost, it's very labor intensive, cost intensive business. And so they're reliant upon the funding a lot of times of the pay, just like that, of the commercial banks. Like they'll call JP Morgan and JP will say, okay, fine, the money's in your account, boom, deliver it to that refinery for us. Is what they do. And because, it's expensive. And when only a small portion of the silver comes from companies that are directly mining it, where the majority of it, 2/3 of it, is byproduct mining of other metals that they have no desire to play that game, it's hard to do that. And so it's a valid question. And I give Keith a lot of credit for that. He's a businessman, he's not a geologist, and he understands it, but it's like spitting in the wind when you're the only company saying this and doing it and the others don't follow suit. It's a valid question. If 90% of the silver came from primary silver miners, it might be easier to accomplish, but it's a very small amount, and many of them have been beaten up so badly over the years, their share price, and that they're cash starved. And so when they do pull metal out of the ground, they have to get paid for it, and they don't have the luxury of being able to withhold production. So valid question, but much harder to implement due to the circumstances than you would think. It is the best, an asset that is expanding in uses, military, green, digital, is being pushed to become a strategic metal by forces in Canada. Is being accumulated by so many of these countries around the world, buying up all the concentrate in the doré, shipping it back to be refined. All of these stories that we hear about the huge short positions, the country's continually standing for delivery. All of these things tell me that, yeah, silver is the value of a generation. And it's hard to say that and be anything but completely sincere about it. It is. It has such low downside and such great upside. To me, it's literally the value of a generation. And I do mean that. And I've been accumulating it myself over gold simply because it offers that potential. Look, I think gold will go higher than people think possible. I really do believe that ultimately the Fed wants it to be revalued. Whether they do what Cynthia Loomis said, just revalue it, the same thing the head of the Dutch National Bank said, or let it stair step up, and use it to help liquefy the Fed's balance sheet at a much higher price. I think it will be. And I think it will be tied to a new system, whatever that new system looks like, whether it emanates from the BRICS nations backing their new settlement currency with gold, or whether it comes from the West and Trump pulls something out of his hat and surprises us all, and ties a new system to gold. However it works, I think gold will go higher than people think possible, and I think it will be tied to a new system. But there's a 90% correlation throughout all of history between silver and gold. Silver is wickedly undervalued by every metric, geologically and price history wise, going back 5,000 years with gold. I don't know of another asset that is as heavily used, as widely accumulated globally by big money, and at the same time wickedly undervalued the way silver is.
In today's news recap, silver price rebounds off $30 and heads to $32 as USD retreats after weak US data. Silver has been showing resilience this week, climbing $1.50 with the USD dollar in retreat, supporting the bullish momentum we predicted on Monday. As the Federal Reserve prepares for its final rate hike of 2024, silver prices have dropped $5 from recent highs over the past 2 months. However, the metal has found strong support around the $30 level, with the 100 SMA on the daily chart acting as a key technical floor. Renewed buying interest in this zone has halted the sharp sell-off that ended late last week. Silver has shown signs of recovery this week with a hammer candlestick pattern, a classic bullish reversal signal emerging after the recent retreat. The upward momentum strengthened yesterday, fueled by weak U.S. economic data. The ISM Services Index revealed a sharper than expected contraction, reflecting cooling demand and employment in the services sector. Additionally, the ADP report highlighted slower job growth in both goods and services, signaling a softening labor market. The weakening economic data has eased concerns about aggressive monetary tightening, providing a boost to silver as a safe haven asset. With supportive technical indicators and shifting market sentiment, silver's outlook appears increasingly positive heading into the year's final stages. Silver declined to $30.43 yesterday before stabilizing and climbing to $31.46, marking an intraday gain of approximately 1%. This movement reflects the interplay of global economic concerns and growing expectations for a U.S. interest rate cut. Amid economic uncertainty, safe haven assets like silver continue to attract investor interest. Market sentiment has shifted toward a higher probability of monetary easing, with a 75% chance now priced in for a 25 basis point rate cut in December, up from 70% following weaker than expected U.S. economic data. This expectation could further boost non-yielding assets such as silver, even as the Federal Reserve signals a longer-term policy of elevated interest rates, with only 2 modest cuts anticipated in 2025. Technically, silver faces resistance near the 31.70 level, where the 50-day SMA serves as a potential barrier for buyers aiming to extend the recent rally. Now, we'll show you more clips, but first, smash the subscribe button and check our pinned comment if you're a stacker, because we have a special promo with NordVPN. With NordVPN, you'll make sure that your data is never exposed and that you browse the internet in a discreet way, which is very important if you're doing consistent investments. Link down below.
Ken, I think you should hold it yourself. And you're right, it is an asset that has no counterparty liability when it's held in your own possession. We do have a storage program that I'm very proud of. I think we're the envy of the storage industry in North America. We have vaults all around North America with Brinks. And they're all completely and totally segregated. We have the only safe deposit box program that Brinks has ever offered. We have that in Vancouver and Toronto. Inside the vault, one key boxes where you hold the only key and the only spare. But when we talk about our locations, New York, Miami, Dallas, Salt Lake, Los Angeles, Montreal, Toronto, Vancouver. So we have 8 locations, and I have been working with Brinks for 20 years and never seen an ounce misplaced. I make money when people store, albeit not a lot, but we make money. And I would still tell people, yeah, you're far better off holding it in your own possession than allowing anyone custodianship of it, period. That doesn't work for everybody. But if you think about it, especially with gold, I mean, in this coffee cup, you could have $500,000 in gold, literally. You could probably stack 100 coins in there and, or more. And so you're talking about maybe not quite $500,000, but 300,000-400,000 in a coffee cup. You could hide it pretty damn well. Silver is a little bit tougher. You could dig a hole in your backyard and be a midnight gardener. You could get a big house plant and put it on the bottom of the house plant. You could put it under a floorboard, put it up in the insulation in your attic. I mean, there's a million places you can hide stuff, and someone who breaks into your house doesn't have the time that you would to hide it. You're best to hold it yourself if you can, and the removal of counterparty risk is something that shouldn't be underestimated in a systemic world that we live in. But if that doesn't work, then choose a storage program where you're working with a company that has a great track record, a big balance sheet, and that you know where it is and can go retrieve it if you have to. There are storage programs where no one knows where it's stored, just that it's with a big company. Not good. You want to know where it is. Can I go retrieve it? Who's holding it for me? Is it completely and totally segregated? Not just allocated, but segregated. Allocated is pooled to a program. Segregated, it's in Jesse's name. And that's what you would want. Segregated, insured in your name in an institution where you could go retrieve it if you had to. So, yeah, I think storage for some people is you have no choice. But if you do have a choice, take physical possession of it. I think there are very few things in this world that seems to be getting more and more digital and more loss of privacy. It's one of the last few things that add to your privacy. And, I think it's nice. You look to your family and say, look, this is for you someday, and no one knows it exists. And there's a lot of benefit to that. So physical possession to me always is option number one.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.